The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Darrell Martin.
Good morning, Money Masters and Treasure Hunters. Welcome to the June 6th fantastic Friday edition of the Nadex Bull Bear Binary Option Hour with your host, Darrell Martin. And I'm Steve Rhodes, filling in for Tom O'Brien for the day here, at least just during this hour, I should say. Darrell and I, well, we're grateful for your presence here today, and our outcome, it's to teach you how to set it and forget it, a phrase popularized by Ron Popeil, who brought to us such great products, things like the Popeil Pocket Fisherman. And, of course, I'm an owner of one of those, or at least was. It is collecting dust, I'm sure, somewhere. You know, and in the spirit of teaching you how to fish, our resident expert on the Nadex platform, Darrell Martin, he's going to share with you a powerful set of tools during this hour, just as he does each day from 1 to 2 p.m., each day at TFNN. Folks, now, the most important aspect of trading is called capital preservation. And that's the real beauty about the Nadex platform, because your stop is your trade. Your risk is your risk, because your stops are automatic, and the market can never gap up or below your stop. So Nadex, it's a fantastic way to trade. Our man Darrell Martin, he's here to show you how. Our call number is 877-927-6648. We'd love to field your calls. But first, let's begin our day with a beautiful thought. It goes like this. Because I believe life is better if you live life fully, if you experience everything. I say take care of yourself and your friends. Have fun. Be crazy. And go out and screw up. Let's face it, from time to time, you're going to anyway, so you might as well enjoy that process too. Take the opportunity to learn from your mistakes. Find the cause of your problems and eliminate them. Don't try to be perfect. Instead, just be an extraordinary example of being a tiger or a tigress out there. And if one of your mistakes in trading is using stops, then learn the Nadex platform, because you do set it and you do forget it. It means you can go out on the golf course, have a good time. And there's no one better to teach you how to use this system than our man, Darrell Martin. Good morning, Darrell. How you doing today?
I'm doing fantastic. How are you doing, Steve?
I am doing just great. Let's check out the markets here. Let folks know what's going on. We got the Dow's up 70 points right now. It's trading out at 16,905. S&P is up 7, trading 1947. Nasdaq up about 0.4%, up 18 points at 43.14. Russell 2000 leading the charge this morning. She's up $9 and change, trading out 1163. NDX is up 12 points. New York Stock Exchange up 41. The gold silver bugs index, the XAU, it's off $1 this morning. Gold is down $5 right now. It's trading at $12.47. Silver's back 14 cents. It's traded at $18.94. Crude oil up 19 pennies. It's trading at $102.68. That's kind of the market. Darrell, what are you looking at? Any kind of trades? Anything that we should go look at?
Well, a lot of the trades just happened, right? So we've had NFP coming on out. We had the Canadian employment rates pop on out there. Looking for a pretty flat market, good chunk of the day after this.
Flat. We're up flat. It's up $70.
Exactly. So that's why I call flat, man. Come on now. But no, I'm just saying, like usually on the currency markets. Okay, on the currency markets on a Friday.
Yeah.
After a major news release, by about 11 o'clock, usually it's pretty cooked. Because I'll go through, I pull all the stats, and I'm always about like trading the news.
Yes.
And so we've been, really, even euro dollar with all its, volatility from yesterday, a lot of that got sucked out. But, the NFP popped up, came back down right here, just, basically a 0.5 deviation. I'm always talking about the deviations and settlement.
Yes.
And so I wouldn't be surprised to see it oscillate here. It's still a range.
Now, is this the euro US dollar chart that you're looking at?
Exactly. So we got the euro US dollar. Of course, it had that big monster move yesterday, right? So it was just flying over there. And you can see this, straight down, straight back up. But today, pretty quiet. So
yes.
With NFP, and we just, I was looking at, got my fibs on there. We had a 50% retracement. It stalled. It went all the way down to the full retracement right off of the pre-release. And so it popped up, came right back down just now. This is where it was right before we were released out. the low, at least of the overnight session there. And so, yeah, probably pretty cooked out right now at the moment. Now, that's actually a good thing. You can make money with that on Nadex. You can go in, you can look for various trades that you can do. Looking at your analysis, I mean, would you see the euro dollar maintaining that support right there at 36, 15 or higher?
Well, if I look at the euro futures right now, and we just switch over, and we take a look at the market profile. If I were to use what time frame chart do you have up on the screen?
Oh, I use tick-based charts.
Tick-based charts. Okay, so I'm not going to go down to that. How about if I just use a 30-minute chart? I'll use a 30-minute chart as an example here right now. If we take a look at the support area, it comes priced at right now about where the euro's trading at. 136.31 is support for the euro. We would say on a 30-minute chart, if you were to see a break below that level, then you could take a look at a potential short type trade. Otherwise, as you're saying, somewhat range bound here. Anywhere from the low of 1.3631 up to probably a high resistance is probably 136.58. Now, I don't know if there's any kind of trade on the euro for that. But that's what it's saying on a intraday chart, such as a 30-minute time frame. If I just bump that up a bit, double it, and go to a 60-minute time frame, let's see if we can find a couple of support areas to no. In the 60-minute chart, it says it's still under pressure here to the downside. It actually says that you'd find resistance at about 136. 130, it's trying to trade into resistance here right now. So on that time frame, using those two as some intraday time frames, nothing really sets up real nicely. I would have to say, though, what's interesting here about the euro, after the comments from Draghi yesterday, what was interesting about the euro here, and we're looking at a weekly chart right now, Darrell, is it got down a little bit below what's referred to as its support level of about 1.352 on its market profile. That area is held. And until that area holds, it says the euro could just continue in its consolidation zone, and it's really been consolidating since November. This is a weekly chart. Since November 2013, really been a sideways consolidation, bouncing between that 135-ish range up to about 138. So a pretty decent trading range for sure.
Yeah, definitely. So the way you could take advantage of that, looking at that, the range there about 36.30 or so.
Yes.
As a support, is you can go in and you can actually buy a binary that is below that price. Okay?
Yep.
And when you do that, basically what you do is you're collecting premium because you're saying that the market will stay at or below that level. So if I went in right now, I bought a 36.25 contract. I could do a 3 o'clock. I could do, 11 a.m. There's a whole range I could go in and grab. But if I said, let's say it said 36.25 over here, if I said the market was going to stay above this level, maybe not, and I could have like a little stop, slightly below it.
Yes.
As long as time passes, or it goes up, stays flat, even if it comes down about 10 ticks against me, I can collect premium. So think of this sort of like a credit spread.
Yeah.
But you could do them on like a 1 hour time frame, or every day, or even every week. So, a lot of people are used to credit spreads or maybe iron condors, type trades like on a weekly basis with the weekly options that are out there. This allows you to do it on an hourly basis. So you can do your intraday analysis just like maybe you do like your larger scale analysis, and you can establish support resistance zones, and then you don't have to worry about it having to move somewhere to make money. As long as it will just honor that zone and not break below it, you'll collect money either way.
Well, I'd say you're in pretty good shape here of it. I mean, as far, how high up on the ceiling? When you're taking a look at the zone, how high up are you taking a look at being able to find a trade for that?
As far as let's see, how high do we want to go? Well, we actually can choose whatever we want. So, which is pretty sweet. You can go in there and really build your own trade. That's what the beautiful thing about options. So we could go up to get a decent premium for, let's say, 10 a.m. or 11 a.m. right here. I mean, for 11 a.m. you could get a 36.48 right now for a decent premium. Okay. On the 12
I would say that would be a pretty good trade. I would have to say, even on the shorter term, if it gets up to 1.3649, that area ought to hold. That's really its point of control on a 60-minute chart. So you'd have to say if it can even punch through a little bit higher here, that area ought to hold.
So you can put that trade on, and if it'll stay below that for the next 45 minutes, then you'll
how much premium would you collect?
You collect $21 on the trade for every 100, or for every basically like 70. Right now it's $23. Okay, for every 77 you put up. Okay.
Yeah, that's a good trade.
And you don't have to take this is a big thing I teach people. You don't have to take the $77 risk.
Yeah.
Okay. You can get out of the trade if it hits your strike at $50. So we're talking basically a 1-to-1 risk-reward trade. Okay. But where the market can stay flat, go down, or even go all the way up to 36.48, if you want to do that. So now you could stay in the trade, and your risk is capped at $75, but you're only bringing in $25. So obviously you better be right very often.
Yeah, no question. No question. Yeah. But I would have to say, based on looking at the tools that we've got right now, between now and you said that's an 11 o'clock expiration.
Yeah,
that's a good trade.
So the ones I was looking at
to me would look like a good trade.
And I already grabbed some of these with the 36.28s. So as a support, and so basically saying, hey, if it stays within this 20 pip range for the next 45 minutes or so, then we'll collect $50 on the trade total. And if it doesn't, now here's the beautiful thing. If you do both sides, it's now basically what I call a butterfly, okay? Buying a strike below, selling a strike above. And so if I'm collecting, say, $25 on the lower side and $25 on the upper side, then that's a total of $50, right?
Yep.
Well, the most I can lose on either side would be, say, $75. But only one side could lose if I left the thing on until expiration. Correct?
Yes.
Like it can't be both above and below.
That's right.
It can't be above 36.48 and below 36.28 at 11 o'clock.
Right.
It can be between them, above it or below it, but not above and below those numbers at the same time. So if I do a butterfly like that, that's equalized risk, meaning if I'm risking 75, but I can make 25 on the other side, that means I'm really only risking $50 because I'll lose 75, but I'll make 25. On the side that won, and I'll lose 75 on the side that lost. If it stays in the center, I'll make $50. So now I have a 1-to-1 risk-reward trade that I can just leave alone.
Well, we'll write that down. So we'll take a look at it before we're going off the air. There's 4 minutes to go, I think, before we actually go off the air. But what we're talking about here, folks, we're talking about a trade with the euro staying below 136.58 or 136.57. I don't recall which number it was that you gave us. And to me, that looks like a pretty.
Yeah, right around there.
Yeah, that looks like a pretty good.
If you wanted to go higher, you can always go further out in time. I think it's not that, like 12 o'clock is 36.51. That's really not that. To me, that's not worth it for 2 more ticks.
Yeah,
not really getting that much more money for it.
Right.
And then let's see here. Actually, yeah. So yes, right there. And then we go down to the daily. Now, this is going all the way up to 3 o'clock. Now that pushes it up to about 36.60, but you're only getting like $16, so it's not really worth it.
Alrighty. Hey, folks, we'll be right back. Darrell and I will be back with you. We'll take a look at a couple other trades as well. Right now, we've got the Dow at 56, S&P at 5. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works,
Visit the front page of TFNN.com.
Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Binary Option Hour with your host, Darrell Martin, and I'm Steve Rhodes, filling in for Tom while he's away for the morning. Right now, the Dow's up 56, S&P is up 6 points. We're going to go just down the road from our man, Darrell. We've got a caller on the line, Mike, in Dallas. Mike, thanks for calling. Thanks for holding. How you doing today?
How you doing? Great. Darrell, just wanted to ask you a quick question. Would it be real difficult for you to add the DAX to the deviation levels?
I have a new deviation formula I'm working on putting in there. The difficulty is you have to, for the current deviation levels are all implied volatility based. Okay?
Right, yes.
And you need to be able to get easy access to option data to be able to pull out implied volatility.
Oh, okay.
And so obviously not a whole lot of, access to option implied volatility for DAX. So that's actually why it's there.
Okay. Well, that answers my question.
But there is a trick that you can use, okay?
Okay.
That sort of a way to, I guess you could sort of say to rig it based on the option price to help you out when trading the DAX.
Okay.
And what you do is hop in on Nadex.
Yes.
Open up the daily spreads. They open up like at 3 o'clock, but you can open them up, whenever you get up in the morning or whatever, okay? So they open like at 3 a.m., and then they close at 4. Find that daily spread. Find the upper one and the lower one. Okay, so there's going to be 3 of them. You got the upper, middle, and lower.
Yes, upper and lower. Okay.
And then you know how you can open the chart of the spread contract itself over on Nadex?
Yes.
Open the chart up, and then just make sure it's like on bid. Okay, like mid. I mean, on mid price.
Mid price. Okay.
And look at the difference between the upper mid price and the lower mid price. Okay.
Okay.
So let's say there's 10 points difference.
Okay,
right.
10 points difference.
As an example. That is the deviation move of the implied volatility built in. It's sort of a rigged method. It's not the exact science of it, but it's basically the implied volatility deviation move expected in the option pricing itself.
Which is going to be the difference in the mid price and the lower price, or the lower price.
Exactly. So if you go take a straddle on, and you can use the same concept. You go take a straddle over on Apple for 2 months from now, and you look at the at-the-money straddle, which is basically what you're doing by doing this, okay? So you look at the at-the-money, the straddle right there, it's just right there. The cost of that entire thing is basically how far they're expecting in movement.
Okay.
For now, you take the entire thing, and you have to take that all the way up. So you don't just say, that's the range, okay? So if it's 10 points, it's 10 points up from where the price is at 3 a.m. and 10 points down from where the price is at 3 a.m. Okay, so that's your one deviation move up, your one deviation move down. That's why I track 0.5 and a whole deviation move and all that. But so that lets you know, hey, either 10 points up or 10 points down, or maybe 5 up and 10 down from there. Okay, so 5 up and -5 from where it opened at, but always 10 or whatever that number happens to be. But that's a way to sort of a quick, crude way to grab an expected movement on any instrument that exists.
Okay. Well, that's excellent. Well, thank you very much, Darrell.
You bet. Okay.
See ya.
Always enjoy it. Thank you, Mike.
That was Mike in Dallas. Great questions there. And, I wanted to do here, Darrell, because, the markets right now, they're up about 60 points. We're into summer. Really, I'd have to say, I don't know if in the north, if they're out of school this weekend or next week, but, pretty much close to the the real first week of summer across the board.
Yeah, my daughter, she got out last week, and I think her cousin in a different district got out this week. Of course, we're in the south, but yeah.
Yeah, exactly. So most folks really say you got the first, you really got summer, so you got summer trading. Yeah. Should be kind of light volume here. If the jobs numbers, if we were going to see a pop and drop or something, we would have likely have seen it by now. So the market should, be fairly steady, should stay around these levels, maybe even drift a bit higher out here. So maybe what we can do is we can take a look at some potential trades for earlier in the week, things that might be setting up. And I want to go take a look at gold here. It's down $5 right now.
Okay.
And when I put up on my screen, I want to do two things here. I first put up on my screen, I'm going to go back and we're going to take a look at the Dow. Now, and we're taking a look at the Dow. This is going back to the March 2009 time frame. Now, the March 2009 lows were made with a nice 1.618 butterfly expansion pattern. It really couldn't get much better than this with regard to drawing expansion patterns. Number one, you had a swing point low on November 21st, 2008, makes a nice move higher into January of 2009, and a big A to B equals C to the downside. Now, the reason I'm showing this pattern here, and it's because I talked about it yesterday to folks. In the case of gold, we've got a confirmed A to B equals CD to the downside. So when we get back from this break here, we're going to take a look at gold. We're going to take a look at the pattern that's forming right now. We'll take a look at the market profiles. And then maybe Darrell will be able to assist us with some potential trades for next week, or at least what to look for. 877-927-6648. We'll be right back, folks.
All right.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 67. S&P is up 7 points. Before we went to that break, we were taking a look at the Dow chart. Now, there was a reason to take a look at the Dow chart out here. It was going back to the March 2009 lows out here. So after making a pattern, when you're trading, you want to be able to utilize, my opinion, you want to be able to utilize different patterns that you're looking at, whatever it is that you trade, whatever that pattern is. Then you're looking for some type of confirmation. Confirmation is usually going to come from some type of reversal signal. So at this stage here, we've proven the pattern that was out there. Now what we have is we've got this little four-day reversal session. I referred back to it yesterday during the 9 to 11 o'clock show when we were taking a look at gold. So we're going to go back there. This is a pattern that I call the U of M. It's because it uses the U from the University of Miami logo out there, and it's a candle session that if you had scanners out there and you were looking for morning or evening star patterns, it would pass them. It would pass right over them, because typically those are sessions. The reason why they use the number 3 there is because there are usually 3 candle sessions out there, and most systems aren't smart enough, intuitive enough to pick up a 4 or 5 candle reversal signal. And when you take a look at those morning stars, you usually are going to have a down thrusting candle like this red one right here. That's on the trading session of March 5th, and then 2 sideways, smallish body type candles out here on the or 1 or 3 or 4 or 5, how many? But small body type candles, and then a big up thrusting day like we saw coming out March the 10th off of the lows that were out there. You'll see this pattern here also similarly along the way on the move up from March of 2009 when other significant bottoms had formed. If you come back and you take a look at the time frame back here in July of 2009, really the first significant correction in the marketplace, you'll see the exact same pattern. Only this time it took place over a period of 5 candle sessions out there. Okay, so that's that. And you can, if you go look at the Dow chart, you'll see it in many other locations. So now what we do is we fast forward to Goldilocks. So if we go take a look at gold here, we'll pull that up on the screen here momentarily. Give me a moment here to find gold. We take a look at what it was doing yesterday. In fact, I still have it highlighted, the box area that we were looking at. Now, inside of gold, as it was making its low on this trading session here of June 2nd, not as wide of a bar to the downside, but nonetheless a bar enough to be wide enough to be taking a look at the next 2 candle sessions. And what's interesting here is yesterday's candle session was enough to actually form that Morningstar reversal pattern out here. And it says that maybe what gold is trying now, the issue that we've got here that I want to point out is that you can see here on the daily chart, you've got gold is in a really oversold condition, meaning it's pushed through that relative strength, 14-period relative strength indicator, get down into the 25s. Anything below 30 is certainly in an oversold condition out here. So you would expect, and we're not seeing that today, you would expect to see some type of pop. So the trade potential, as I see it here, because these are significant reversal patterns, and at this stage here, if gold breaks to the downside, okay, so it gets below the price level I'd be looking at is about 1240. What that likely is going to set up for you, whether it's a Nadex trade or what have you, it's likely going to suggest to us that the confirmed A to B equals C to the downside is still in place here. And that takes you down to probably the December 31st area, somewhere between 1181 and 1214. Most certainly the 1215-ish, 1226 type level out there. And so, you know, on Nadex you could probably make some pretty decent bread if it were to break to the downside below the 1240. Likewise, because this is a bottoming pattern, and any trade that we take, folks, you want to be able to take a look at both sides. And in the case of Nadex, it becomes pretty easy to be able to do that. If there is a bottom here, at a minimum, or if just simply working off this oversold condition, what you could do is you could just simply take a look at the last leg, if you will, the high that was put in probably on May 22nd, down to the low that was put in down here a couple of trading sessions ago. And you ought to see gold at least get up and test the 1279 area. 1264 certainly is going to be, that's your dead cat bounce, that's your 0.382 level, and it happens to be approximately the low of that big down thrusting candle that confirmed the A to B equals CD to the downside. And that was on May 27th out there, and that's at the 1263 area. So the 2 potential trades for you to look at if you're trading the Nadex platform, in my opinion, because of the potential power of this reversal signal, and this is where you're looking for trades going in either direction, would be looking for that type of a trade setup inside of gold. Now Darrell, do you trade gold much through Nadex yourself?
I trade it some, yeah. I trade the binaries more than anything else on gold, just because the spreads don't seem to have the liquidity that I want.
Yes.
But, so, you know, for the size that I want to be able to hop in on there. But,
okay.
yeah, so I'll go in, and I definitely will trade that. And, by the way, our contract up's doing pretty well right now, our little butterfly.
Oh, okay, so, good.
Yeah, we're about $100 so far. And,
okay, that's good.
Yeah, so it's moving along, just collecting premium on watching paint dry. I mean, that's pretty much it.
Hey, well, we like we don't like watching paint dry, but we do like collecting premium.
I like getting paid for it. Right?
Now, yeah. in that case, there for that trade, we were using some intraday time frames inside of the euro, and we were just also using just some natural support and resistance areas by taking a look at the futures contract and going ahead and bringing in one of our partners, the TAS market profile system out there, and you know, and it was very clear. It's very clearly laid out, in my opinion, where there's resistance for us. So that's nice, and it became easy to go ahead and utilize that system to assist us. If I go take a look at gold as well,
Okay.
The interesting thing, so we'll go ahead and bring the market profile into what we just talked about there as far as potential long and short positions. And I'm going to go back to the daily chart out here. So we take a look at the daily chart, and I'll blow it up on my screen. What we'll see here is yesterday there was a new market profile that had formed, and that says that the unfair low or the support level would be 1245.70, and the unfair high is at 1256.60, and against the daily chart. So it really helps folks, in my opinion, to be able to set up this trade. I don't think it's a trade today necessarily. Well, it's a trade whenever it either breaks one of these two areas to the upside or to the downside out there. And I think it's a beauty of a potential trade out there to be able to utilize the Nadex platform for a shorter term trade. Of course, now we're using the daily time frame as our signals as to when to get in on either side of the trade out there. So that's one that I can see that I would recommend to folks out there. And
so
that's
that unfair high and low. Do you see like a 2445? Or I'm sorry, 1245, 1253. Does that look like a decent support resistance zone for today? At the 130?
Yeah, I would have to say that it is. You know, it seems that also because it's a Friday, a light volume day, if gold was going to sell off, it would probably break that 1245 area pretty easily. Now, if I go take a look at a shorter term time frame out here, you know, a 60. Well, let me do this. Let me go to a 240-minute time frame here, just to bring in something.
You went from
that's
short to long right there.
Well, yeah. Well, I just want to, wanted just to take a look at what was nice on the euro trade was we could see where you had synergy between some support and resistance areas on multiple time frames. And that's really why I said, hey, that's an easy trade, because we had something lining up on like a 30 and a 60-minute and a daily time frame that were areas that should hold as support and resistance. And that's one way that's a great way to be able to put together market profile information. Because again, it's not anything, it's a different way of using math, just like you're using standard deviations when you see markets move, and catapult or slingshot in one direction, or the next out there. And that's where when you can get things to line up. So inside gold on the 120-minute time frame here, it says it's going to struggle to get to 1253. I don't see that same trade set up. So to answer your question, I don't really see that. It probably is a good range out here, but I don't have the same
even the
type of...
Like if you look at the 945 period there, like we had that's a very high volume bar right there.
Oh, yeah, very, very much so. Yeah.
So in a sense, establishing a support, but also establishing a magnet, price.
Yes.
So a little bit of both there at the same time.
And it's a good point. It's a good point that you pointed that out, because the interesting thing about that bar on that 120-minute time frame is what I've got on right now is it pushed lower, and it got down to a price level of that 1245 area.
Yeah.
And interestingly enough, 1245 happens to be that support on the daily chart. Now, maybe you pick that up.
Yeah, well, and also the minus one deviation is 1245.4.
Is it? So there you've got a bunch of math coming together, and then I'd have to say your question, do I think that's a pretty good range? I'd have to say, yeah. Now, of course, we know about. Let me put this on a 10-minute chart. I don't know when that push came down. But let's go check it out. Let's go see if that low at least has been tested out here. So now let's use part of Tom's system, and Tom loves looking at the 10-minute charts out here.
Oh, I know, man. Yeah.
And so on that 10-minute chart, you'd have to say, because it pushed lower at 9:40 this morning, so you have a big seller out there. And you'd have to say that you'd like to see that low get tested before you know if that's really going to hold as a good support level. And we're a ways from that 1245.70. So on one more push down there on light volume, and if it weren't a Friday, you'd say, yeah, that's a pretty decent trade setup. As far as the range, in my opinion.
Yeah. So, if it wasn't Friday, I wouldn't take that range at all. But being that it's Friday what it is, and being that we already hit the level, and that literally is one exact implied deviation. Yeah. I mean, we came within 3 ticks of what I said would be basically the low of the day. So 1245.7 was the low, and I called 1245.4. And again, it's not using like standard deviation, which is like historical movement.
Yes.
Again, we're extracting that implied volatility out of the options market, where the option market's telling us how far it's going to move.
Yes. And
so it's pretty sweet. It's nice to have that confirmation. Like you said, you add in, like, you got TAS saying that, you got the deviation saying that, you look at magnet pricing levels. That's helping define it. And it's almost like this entire bar is like the range in and of itself on the 10-minute bar here.
Yes.
So that we may stay in really till the end of the day. So right about that zone, I could easily see that. And one of the things I like to do is I'm all about statistics, right? So if we go in, and what do we got till expiration here? We got a little bit of time. But I'll go in and I'll look to sort of like at 1 hour time frames and how far I expect the market to move on any given hour.
Yes.
And so what I show right now as the largest move from the high would actually be up to about 1253.3 on this hour, on this day of the week. Okay?
Yep.
And then if it were to move down, it'd be 1241.5. But we're not really moving down, we're moving up. So yeah, that basically brings us right up to about 1253, which is what we were talking about there.
It is. Yeah, that's the range of resistance for sure.
So that's definitely a good, we're like right in the middle of that whole zone right there. So it's really a good time to go in and look at that range trade.
Yeah, well, then there you go. So we've given folks, who tuned in this morning, we've helped to make them about $100 so far in half an hour's worth of listening and work. And so, folks, if you have not had a chance to utilize the Nadex platform, come on over to the homepage at TFNN.com. You'll see the banner for Nadex. It takes you a good 4 or 5 minutes to set up a account.
Oh yeah, it's fast.
Yeah.
Yeah,
and then what you've got is Darrell 5 days a week, for 1 hour, actually 1 day a week, 2 hours, on this show out here. So it's really pretty simple. And for those folks that don't use stops, man, oh man, this is the system to use, because once you place your trade,
I use mental stops, and I'm like, yeah, it's mental, because like that just here's why they don't use them, because my stop's going to be hunted. And then they get rewarded for not using them, and then it works until it doesn't.
Yeah.
And one thing I was doing this yesterday with some traders. It was pretty sweet. I went in, and one of my favorite methods, because get a lot of traders who are like, well, I mean that's cool, but I trade futures, right? Or I trade forex. I don't want to have to relearn everything I do. They go through that scenario, and I'm totally with that. I actually get that. Because I actually started off my very first strategy, which is still my very favorite strategy when trading on Nadex, is I just go in and I hedge my trades. And, I mean, most traders out there that have been trading for a decent amount of time, they at least know like what a married, put is, like, just buying a put to cover a stock.
Sure.
Right? Basically, you can do the same thing on Nadex. So let's say you're trading the S&P, okay? And you can go in here, and I'll actually scalp. I was doing this yesterday. I put it on the Russell. I was just scalping. And you can go in here, and you can buy, say, like 5 spreads or sell 6 spreads. So I could go in here, let's say between now and 12, okay, $20 there. I could go in, and I could just put these spreads on. And it would cost me about $100, okay, to do that trade.
Mm-hmm, mm-hmm.
And when I put the trade on, then I actually have it could make up to $350. So I have coverage up to $19.55, like over on the S&P. Okay? And so we're talking about basically a 10-point coverage.
Right.
Well, the S&P's trading at $19.45 right now. So let's say I think there's going to be a little oscillation. The market's going to go up a little bit on the S&P. I go and I buy those spreads. The market goes up to about where I bought the spread at, $19.47. So about a point and a half move, not a big move. From that point, I can now go in and start selling the future contract. S&P drops back down a point or two.
Yeah.
Take it off, $1,500, and literally just rinse and repeat, especially on days like this where it's flat. And you can just scalp all day long, but without the fear of like what happens if the market explodes on you.
Very nice, very nice. Folks, Darrell Martin, Steve Rhodes, we'll be right back. Get over to the homepage at TFNN.com, click on that Nadex banner. You'll be glad you did. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks, to the Nadex Bull Bear Binary Option Hour. Your guest host, Steve Rhodes, and then Darrell Martin. Tom is out for the morning. As we speak right now, the Dow's up 70, about 69 points. It's trading at 16,904. The S&P is up 7. Now it's the Russell 2000 that is leading the charge here today. It led the charge yesterday. You've got the NASDAQ Composite and the Russell 2000, the two leading indexes out here. That says we're in for a nice, strong summer rally out here. So sell in May is just going to have to wait. And sell in May really isn't to sell in May or May 1st. Sometimes it works that way. But what it is, folks, it's a 6-month what's referred to as an unfavorable seasonal cycle out there. At the moment, based on yesterday's action, there was nothing unfavorable from a from a Bulls perspective at all. In fact, if we take a quick peek and look at specifically take a look at the IWM to see what it is doing. It's leading the charge. It had wide price spread, accelerated volume yesterday, past a B point of an A to B equals CD to the upside. The B point was May 27th. The volume on that trading session, about 46 million shares. Yesterday, blasted through with 67 million shares out there. The 1-to-1 price spread on the A to B equals C to the upside would be 117.51. You're trading at 115.94 right now. I expect that what the IWM will do is do more than a 1-to-1 A to B equals CD. In fact, I would say at this stage, until proven otherwise, what the IWM wants to do, it wants to go catch up with the other index ETFs out there, and it wants to take on or at least test its highs out there. That means the IWM is really shooting for the March 7th area, right around the 120-ish. 120.47 is the actual swing point out there. So you had a nice move inside the IWM. If we take a look at market profiles on the daily, it's above its unfair high, so it's above resistance, so that's a positive from a weekly standpoint. And taking a look at the IWM, it is also above its unfair high. So you've got above its market profile, it's in bullish zone inside of it. So that looks pretty bullish. If we take a look at the diamonds out here, so the diamonds were a little bit weak out here. The diamonds here. Go ahead.
I'm going to interrupt you real quick because we're going to close this trade down just so everybody knows. So.
Okay.
But we were capturing about a little over $160 profit right there. So not too shabby for 40 minutes and nothing, right?
Hey, we paid for people's time to listen to us.
There we go.
Huh? Yeah. You got to like that. So, folks, what Darrell and I were just simply doing there is, number one, utilizing the Nadex platform. Once we identified areas of support and resistance, and especially in today's session, which looks like it's a Friday, it's summertime, we were able to collect some premium on what looked like a range that the euro ought to trade within out there. So, do yourself a favor. Really do yourself a favor. Go to the homepage at TFNN.com. Over on the right-hand side, you'll see the banner. Go download that stuff, and then tune in to Darrell's show every day here at TFNN from 1 to 2 p.m., and he'll help you find trades like that as well out there. So any parting words for the weekend for our listeners, Darrell?
Enjoy the summer. Take time off. Summer. That's about it. Yeah, I mean, there's no big wise advice. Just don't forget to relax. Don't look at your computer and just enjoy it.
Yeah, like leave the computer these days happens to be your cell phone.
So it's funny. My wife will call me out on it. I'm like, yeah, I don't have my phone, and she's like, I think you leave it at home on purpose, and I'm like,
yeah, yep. I pretty much turn it off on weekends myself. Hey, Darrell, always great to spend the hour with you. Thanks so much for pointing out that trade, making money for our listeners out there. Have a great weekend. You betcha. Have a great weekend, folks. I'll look forward to seeing you Monday morning. And don't forget to tune in to Darrell today from 1 to 2. Stay tuned. Our man Basil Chapman is up next. Have a great weekend, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.